Today is a very tense day, isn't it? Everyone's almost at the nail biting stage because, the Q2 numbers are going to be out today, and to the last 500 BPS, the GDP numbers are being tuned and fine-tuned and retuned. And depending on, which spokesperson is feeling how this morning in terms of availability, the GDP number goes up by 0.200, 200 BPS, or goes up by 200 BPS. So it's that speculative. The Honorable Prime Minister has called for a meeting, I think tomorrow and day after, where they are discussing economy at length. So in this background, I am happy to be, I think it's just a coincidence that the Indian Economic Forum is taking place just the day before, when all these big announcements or no announcements are expected. I am delighted to note that about 400 people had registered for this summit. 80 delegates today who are sitting in the audience are masters or higher in economics. So big hand for all of you. So this is for the first time that we have Indian technocrats, Indian economists, Indian academia, Indian youth coming together, participating in the discourse for economic well-being of the country. I don't think that there is any other single platform which involves these very important stakeholders, and I think this is at first that SKOCH has done. We are not a page 3 conference. We are a serious conference. We don't take place in 5-star hotels. We give very simple food so that people eat fast, the food tastes bad, and the country progresses. The incremental capital to output ratio is far higher at a SKOCH forum than any other forum, is what I can say. So coming to the outlook for the Indian economy, Q1, which was behind us, was bad. It was quite bad at 5%. What is going to happen today, later today, I think is going to be worse. So between 4.2 to 4.5% is the Q2 number that we are looking at. There are people who disagree with me, the people who agree with me. But my feeling is that 4.5% is the best case scenario in Q2 that we are looking forward to. So is the situation really that bad? Why is that 5% has become 4.5%? So that point, and the 5% itself, why could it not have been 5.5%? So one big problem I find is, besides having the fundamental structural issues or reform issues, is the issue of not being able to handle the narratives correctly on the economy. We have people shooting at India, people with foreign degrees, people sitting in US and IMF and World Bank, etc. Everyone is working very hard to deflate the Indian growth story and trying to distort the Indian narrative. And these are people who have had very responsible positions in India. So when they say that India is facing a huge trouble and far deeper than it actually is, the GDP number goes down. So I think 500 BPS I would fall in GDP, I would attribute to all the naysayers who have made bad statements about India, and I would request them not to do so, and I'd request the government to take charge of the narrative and put forth very strongly what the real India story is. That itself is add 0.5% to GDP. I do expect the growth to uptick in Q4. Between 6.5% to 7% growth is almost assured in 2020-21. Why the 500 BPS gap? 6.5%, if we are not able to control the narrative and not being able to make these people who are saying not to India shut up and mind their own business, and 7% if we are able to do an effective job. And this conference today is one such attempt to add that 500 BPS to the Indian GDP by giving the right perspective, saying that this is the plan, it is not gloom and doom, there is hope, and we will conquer. So while 7% is more or less assured with the narrative caveat, for anything more than that, I don't think that the external environment is very conducive. And, the Honorable Prime Minister has set up a very formidable target, 5 trillion by 2025 and 10 trillion by 2030. So I think Fortunately, I'm not an economist, so I don't have to give you the number or the percentage growth that is required to reach those targets. So I would leave that to the eminent panel of economists here to be able to throw some light on what growth rate are we looking at to do that number. But my own feeling is that to do anything beyond 7%, massive structural reforms are necessary. And today, the whole day, we would be talking about these structural reforms. We have organized the Indian Economic Forum to give concrete suggestions on reforms, on budget and revival. And top 30 economists and technocrats in the country are addressing this conference, which is again a first time ever. So if you look at some of the fundamental things that need to change, one is that the GST chain is entirely broken. It is your experience as a consumer, as a business, wherever you go, everyone asks you, you want a GST bill or a non-GST bill. Well, GST was supposed to fix just that, wasn't it? So why is it that it is so poorly implemented that today you are getting a non-tax paid economy, which is probably bigger than the non-tax paid economy before GDP? Just too many exemptions, too many tax rates, not enough matching, and we would have people talking about that. Some of the correctives, I assume, are going to come out on GST from the GST Council. Some others would come out in the budget. Then devolution by the 15th Finance Commission is across the corner, around the corner, and I think Mr. N.K. Singh will be addressing us later today, and that is going to change the public expenditure pattern by April 2020. The benefits of large expenditure on welfare schemes are somehow not being captured. So, while you see the rural consumption going down in some surveys and other things, typically the way Indian statistical system is constructed, it does not really capture welfare economics too well because, the rural consumption has changed. For example, a lot of assetization is taking place. To speak personally, practically every domestic help that we have, and we do have, fairly large number of them, is getting government housing in their village. And, whatever 60,000 rupees, 1 lakh rupees, whatever the government is doing, they're also actually borrowing money and taking their lifelong savings. And house is a very aspirational thing. So they're spending that money on making a better home. So if the government is paying for the toilet, they are spending money to build a bathroom or something like that along with it. And this would not show up in the consumption patterns. So a lot of this is asset creation. Same thing with NREGA. A lot of focus has happened on asset creation under NREGA. Similarly, we say that, poverty is increased because people are spending less on food. Well, people are spending less on food simply because Food Security Act has been implemented very well and people don't need to spend so much money on food that they used to earlier. Having said that, I think hiding statistics is a terrible idea. Whatever is the benchmark, whatever is the convention, whatever is the report, the government must openly embrace it and release it with all the possible caveats from the domain ministries that this is the report, but we believe that these 2-3 things you should look at, which are the changes that are not being captured. Niti Aayog and domain ministries must support independent research. I think all research and rating has become very inward looking in the government. So government rates its own schemes itself, government awards its schemes itself, and lot of micromanagement of the control of the statistics and the narrative is there. I think this insecurity, this level of insecurity is uncalled for. As I said, that people like us who come from the field, who are researching all the time, see a lot of good things happening. So I think Niti Aayog and domain ministries must be open to hear perspective from independent research agencies on what is doing well and what is not doing so well. So what if we say that Ayushman Bharat is a very well performing scheme, and so what if we say such and such is state is number 1 and the government say no, such and such state is number 2. I don't think that whose ranking is what is as relevant as the fact that Ayushman Bharat is a very well performing scheme. We are suggesting several new ideas on structural reforms. This is going to create some fiscal headroom because every time there are suggestions for the budget, everyone says cut this, reduce that, do that, but where is the money going to come from? So our suggestions actually come from where the money can be come from, area where we are leaving the money lying on the table. One is taxing of digital MNCs. So, all of you are buying a lot of things online including me. You buy stuff from Twitter, you buy stuff from Google, you buy stuff from Amazon, you buy stuff from LinkedIn, you buy software online, you pay for your office productivity tools online. Now, where are the Indian taxes on all of this? You know, before the whole world went online, there used to be a customs duty, there used to be an excise duty. There should be some tax revenue that accrues to the government. Today it is GST. But companies don't have permanent establishments in India. Companies are selling this stuff in India online from US. Look at music, for example. Look at all the videos that you're consuming online, for example. So where is the tax revenue on that? It's a very, very serious issue. And that number is not a number to be scoffed at. Second thing is, people are protesting constantly these online marketplaces where people are, selling, doing predatory pricing or selling below cost. I think that's a business strategy. However, the government would be very prudent to tell them to treat all such predatory loss expenses not as revenue expenditure but as capital expenditure. It should be capitalized and taxed. Right now what is happening is that it is being given as an expense, so you're building losses, so as and when you are becoming profitable. So in perpetuity, you are never ever going to pay any tax in India. I think that's a bad idea. Inheritance is not taxed in India. I think it must be. Asset monetization. There is so much of land holding in railways, in defense, etc. Now, how can this be monetized without selling it? Speed disinvestment to generate revenue. Then moving dividend distribution tax to shareholders is another thing that can be done. You should abolish capital gains. I think specifically for real estate, capital gains are a big problem, and unless and until that sector picks up, no one is going to really deal with property. Rationalize GST, create a GST refund wallet. Now you find that government owes huge GST refunds, including to people like ours. But month after month, we have to pay them more, while they still owe us money. Why cannot there be a GST wallet? We can understand that they have a cash flow issue. They don't want to give cash out. Instead, they're paying me interest. But I'm not interested in their interest. Why can't they put my refund in my wallet and I can use the same refund to pay them again? Why should I have to borrow from a bank to pay my GST? So that's an absurd situation. Credit availability to MSME sector has been almost going negative. It's a huge, huge problem. And I would urge specifically Dr. Govinda Rao is here and everybody else who's a GST expert, that this TRED system, the bill discounting system that RBI has introduced with the stock exchanges is a complete failure. Because it puts the onus of bill discounting and bringing people to book, the customers to book, on the MSME himself. Why can't we have a completely electronic system which is based on GST? The minute I file my GST invoice, and I am an MSME, I am registered MSME, my bill should be eligible for discounting. Why? Because under the MSME law, it's a legal provision that within 45 days, the customer has to pay me. Otherwise, there are huge penalties, which no one has ever paid. Government is unable to enforce its own law. And MSMEs like us are chicken. We can't say that this Fortune 500 company is not paying us. So it should be electronically triggered. On the GST portal itself, I should be able to say this is an MSME invoice. The minute I say that, there should be a host of fintechs and banks who can bid for discounting it, and I should get paid. And the onus of collecting that money is on the government. So they already have the Mudra credit guarantee scheme. They have credit guarantee schemes for MSMEs in various avatars. Most of them don't perform. Why can't they credit guarantee these invoices? And make sure that they are able to enforce their own law and collect those penalties. They'll probably make a lot more money collecting penalties. And that's again creating fiscal headroom. Money supply needs to be increased manifold. We should not bother about inflation at all. One good way is to enhance NREGA wages tremendously. Another good idea is that, in India we are very good at innovating, but we are terrible at monetizing that innovation. So one big innovation is, for example, again, my favorite scheme, which is Ayushman Bharat. Now, why can't we defragment all health schemes in India? Why can't we merge them all with Ayushman insurance so that there's a larger risk pool? Why can't all the procurement of medicines be merged with Ayushman Bharat? You'll get volumes of scale and you'll be able to get extremely low price points for medicines which will make India a world-beating country in the pharma industry. Now, all it takes is government to reorder its purchase procedures, to be able to buy in bulk, to be able to honor its contracts, etc. Last but not the least is we must review trade agreements. We have said this in the past. SKOCH has been steady, is the only think tank probably sticking its neck out. We stuck it out on RCEP, we are sticking it out on review of trade. We are not against free trade agreements, but SKOCH stands for fair trade agreements. I think as of today, all trade agreements are weighed very heavily against India, and unless and until we are able to make them fair, I don't think this economy can realize its full potential. Last point, which actually I picked up from the chief economic advisor, which is a brilliant idea, is why don't we make specific products for India? I'm sure he's going to be throwing more lights on that. With that, I come to the conclusion of my outlook of the Indian economy. Sum it up, Q1 bad, Q2 worse. This year we're looking at maybe closing the year at 5%. Next year 6.5% to 7%, depending on narrative control. And we have to press the pedal on structural reforms and bite the bullet in a very, very major way if the 5 trillion and 10 trillion have to happen.